In this video, I'm going to be sharing with you 10 steps to buy a home smoothly and confidently in 2024. Hi everyone, welcome back to my channel. It is Carla here with Benchmark Realty, your local realtor in Clarksville, Tennessee. And it's been a while since I've done a video like this. So with the new year, I thought it was appropriate to do 10 steps to buying a home in 2024. So if you're considering buying a home soon in the foreseeable future, this hopefully will help you. And this is not some scripted list or some cookie cutter chat GPT list or anything like that. This is just my personal list after working years with buyers on how I feel it will be most efficient for you to buy a home. So this is the way I feel like you should do it. Step one is make sure you're financially prepared. So being financially prepared, what does that actually mean? So for starters, that means taking a step back and having an honest conversation with yourself and asking yourself, what can I realistically afford at the end of the day for my monthly mortgage payment? Now, what that is versus what you might get pre-approved for are two different things. Your loan officer might say, hey, you're pre-approved for this and your monthly payment's going to be that, but you might be more comfortable paying much lower than that, right, for your monthly payment. It just depends on you and your specific financial situation, what you're paying for after, groceries are paid, gas is paid, daycare is paid, and all of that is taken care of. What are you personally comfortable paying for your monthly payment on your home? And not only that, you have to have money set aside for your down payment. If you're going to put a down payment down, you have closing cost expenses, which is usually around 3% of the home loan. So if your home that you're purchasing is around, say, $300,000, a good rule of thumb would be 3%, which would be around $9,000 that you want to have set aside in addition to any down payment. Hopefully you can ask the seller to maybe contribute to your closing costs, but that's not always the case. So you want to have that ready to go just in case. You also have things like earnest money, which can vary from $500, $1,000, anywhere up to 1% of the purchase price. It just depends on how aggressive you want to be on your offer. And earnest money is not required, but it is very typical that buyers will want to put down earnest money to show the seller that they're serious and make their offer look more attractive to the seller. In addition, you also want to have money set aside for your regular home inspection, which can be from anywhere from $300 to $600, depending on the inspector and the size of the home. There's also your termite inspection, which is $25 to $50 usually in our area. You have radon inspection, which is $100, $150 as well. The list goes on. You can have any and all home inspections done during your inspection period, a roof inspection, a plumbing inspection, a septic inspection. Any of those things that are going to be out-of-pocket expenses to the buyer that are non-refundable, which means if something comes up in the home inspection period, you see something and you find something that is a deal breaker, that means all that money that you have maybe spent on inspections so far, none of that will be reimbursed. It's just a non-refundable cost to the buyer, any and all inspections. There's also the appraisal that's going to be around $600 to $700. Again, it varies on your location and all the details in your transaction, but those are just some examples in our area. So much more goes into just what was my monthly payment going to be when you're buying a home. So that's why I say upfront, make sure you're financially stable and ready for that commitment. All right, step number 2 is being emotionally and mentally ready to buy a home. Now, unfortunately, I don't see a lot of agents talking about this, but I do think it's important to touch on. When you buy a home, it is a big commitment, it's a big step. So if you don't feel like you're quite ready, then just hold off until you feel like you're ready to take that step, because it is a big commitment. And when you get your offer accepted, when you buy a home, that means you're in a legally binding agreement contract with that seller. That means that you have to meet performance deadlines, there's timelines, there's lots of documents that have to be signed in a timely manner. And if you don't do certain things by a certain time and a deadline, then you, the buyer, can be in default for non-performance. And that seller can potentially go after you for damages. They can keep your earnest money. They can take you to court for non-performance. And we don't want any of that. So if you're someone that is likely to maybe get cold feet, have a change of heart, or you think I just found a house I like better the next day. If you're someone like that, have commitment issues, or just fickle in general, then maybe just take a step back and wait to buy a home. All right, step number 3 is finding your agent. This is obviously super important because this is going to be the person that's going to be guiding you through the transaction from start to finish. So you want to make sure it's a good fit. You want to make sure there's no personality conflicts, that you actually like your agent, that you'd have trust and confidence in their ability to get you to the closing table. During this process, your agent will probably have what's called a buyer's consultation with you, where you discuss all duties and responsibilities and expectations from both parties. You'll also discuss what your needs are in a home, obviously, what your wants are, your deal breakers, because the last thing I want as your agent is to be at a home showing and there'd be a disagreement or argument over a home because both parties didn't agree on something from the start. That can get awkward. So it's just best to have all that hashed out on the front end. And during this meeting, you'll also likely discuss expectations from both parties. You'll discuss what a buyer's representation agreement is, which is agreement that you'll have with your agent saying that they are actually the agent representing you and what that means. Again, duties and responsibilities from both parties, and also how your agent is getting compensated. Step number 4 is getting organized. So when the time comes to get pre-approved, you are ready to go. So you want to gather all of your financial documents, such as proof of income. So that would be a couple months of pay stubs, or your LES if you're military. That would be a couple of years of tax returns. That would be a few months of bank statements. That will also be your offer letter if you're moving to a new job, or your military orders if you're going to a new duty station. Make sure you have checked your credit to make sure there's nothing unexpected on that. Also, I want to mention that if you've gone through, say, a divorce or a separation, and there's any type of mandatory court order payments that you have to pay, such as child support, alimony, or any maintenance of that sort, that you have your divorce decree or your court order ready to go for that in case the lender asks about that. So now that you've gotten all your financial documents in order, we are now ready to get you pre-approved for a home. This step is really important because this is the funding you're going to use for a home mortgage to buy the home. And you want to make sure that you talk to at least 2 or 3 different lenders and compare rates and fees, and just make sure it's a good fit, just like you did with your agent, and make sure they're getting back with you in a timely manner. You like their communication style. They answer all your questions. They educate you on different loan products and what's going to be the best fit for you and your specific situation. That's just as important as your rate and your fees. Are they just going to hand you off to someone on their team and you're never going to hear from them again? So all those things are factors to consider when you are getting your pre-approval. And your pre-approval is different than a pre-qualification. We will need a pre-approval before we get started on looking at homes, because that tells the seller with a pre-approval that you are well qualified. The loan officer has actually looked at your documents. They've actually looked at your credit score. They've actually looked at your pay stubs. They've actually looked at your bank statements to ensure that you're pre-approved for the home loan and you're qualified to buy this house. All right, step 6 is the fun part. This is when we get to go home shopping. This is when, at this point, you have your agent, then you have your pre-approval. So now we get to go look at homes. At this point, I'll be sending you, if I'm your agent, I'm gonna be sending you homes on a regular basis, and we're gonna be narrowing our favorites list. I will also be encouraging my buyers, if they're in the area, to go look around, look at the neighborhood, and make sure it's a good fit before we do formal showings, because there's no point of going to do a showing if you've already looked at the neighborhood and decided this is not the area, location, neighborhood that I want to be in. So that's an easy way to narrow down our list. So once we get your list narrowed down to, it's how your top, say, 3 or 5 homes that you want to see, I, as your agent, will schedule showings. I will also pull disclosures, and we'll review those disclosures to make sure nothing wonky or unusual are going on with the property disclosures. And then at that point, hopefully you'll find a home that you love and that you want to put an offer on. All right, step number 7 is actually submitting your offer. When you are going to submit your offer with the help of your agent's going to write up your offer, the purchase price that you want to offer, and the terms that you want to include in your offer, and all the details with that. And your agent is now going to submit your offer along with your pre-approval letter to the listing agent that represents the seller. And then both parties, the seller and the buyer, will then negotiate terms until all parties come to an agreement on all the terms in the contract. Then the buyer and the seller will then sign the contract, And then at that point, once both parties sign, you are now in a legally binding contract, and also referred to as being under contract. Your offer is accepted. All right, step 8, now that we're under contract, is your inspection period. During your inspection period, you're allowed to have any and all inspections completed on the property. Your regular home inspection, you have your termite inspection, you can have a radon inspection if you want, you can have an HVAC inspection, you can have a roof inspection, a plumbing inspection, a septic inspection. Any of those things are perfectly fine, but just be aware that that is a buyer's expense. And if something falls apart in the transaction, that is non-refundable. You're just out that money as the buyer. If you do find something during the inspection period that you know it's a deal breaker for you, then during that time period, you can legally terminate and get your earnest money back if you're still in your inspection period. But if you're outside of your inspection period, it's too late. Like, you can only legally terminate when you're in your inspection period, or if you're negotiating repairs with the seller and say you can't come to an agreement on repairs, you're asking for a credit, or you're asking for a repair and the seller just can't agree, they can't afford it, or they just refuse, then you can also legally terminate what's called during the resolution period, when you're negotiating repairs, and get your earnest money back during that time too. But it's very important that you have all of your inspections scheduled and completed in your inspection period. All right, step 9, we're almost there, guys, is the appraisal and underwriting process. So at this point, your loan officer is going to order an appraisal, which is when an appraiser goes out to your property and ensures that it meets value. So it means that if you put an offer in for, say, $300,000, the appraiser is going to go out and say, yep, I agree, it's worth $300,000. That's ideally what you want, because the mortgage lender can only lend you funds on what the house is actually worth. So in the event that it comes in low or below value, let's just say it's 10 grand under, and it only made it to 290,000, then you do have a few options. So you can come out the pocket, the difference, if you have it, or you can ask the seller to come down to what it appraised at. But if the seller won't, or they can't, then you can legally terminate if it comes in low. If it comes in under value, you can legally terminate at that point and get your earnest money back. And at that point, the underwriter is also going through all your documentation on your loan application with a fine-tooth comb to make sure that everything that you put in your application is correct, and your loan officer hopefully did their due diligence and verified your work, and the underwriters can confirm that you're still at that job, which is called a VOE. They will do this right before closing, just so you know. Make sure you're still actually working at that job, there's been no changes, that you have the cash to close, you haven't taken any hit on your credit since you were first approved, that everything is kosher, and if so, they will give you the magic words. They will issue the clear to close. That's what we're always looking for, the clear to close. And at that point, it's smooth sailing from there. All right, so step 10, we finally made it. This is the fun part. All the hard stuff is gone. We are closing now. We've gotten our clear to close from the underwriter. And at this point, you and your agent are typically going to be doing a final walkthrough either the day of closing or a day or two before closing, just to make sure everything is good with the house. There's nothing damaged in the house and the house is in good condition, and all repairs have been completed and satisfactory. And you'll also be getting your documents, signing a ton of documents at the closing table, which in Tennessee, we close at a title company, and they'll be going over all your closing docs, making sure that you understand that your monthly payment is this amount, that your interest rate is this amount, that you agree to pay every month, and if you don't, we can foreclose on you, and all that fun stuff that you'll be signing at the closing table. So at this point, the title company is going to be transferring title of ownership from the seller to you, the buyer, the new owner. So they'll be making sure your title is clear, there's no cloud on the title, it's clear, there's no issues or liens with the property, with the title of the home. This is usually a really happy day. You get the keys to your house, you get to celebrate and start moving in. All right, you guys, I hope this video was helpful. If you're still watching, thanks for sticking with me to the end of this. And yeah, hopefully you learned a thing or two about the home buying process. I hope this was valuable. As always, if you're looking to buy, sell, or invest in the Clarksville, Montgomery County area of Tennessee, feel free to reach out to me, text me, email, old-fashioned phone call, and we can have a chat and make sure it makes sense to work together. And as always, I will see you in the next video. Bye, guys. this video, I'm going to be sharing with you top Step 6 is shopping for a phone. For a phone? What? Learn something from this video if you're still with me at this end. What? Guys, I'm recording right now.